Welcome to another Stock Odds podcast. This is Odds and Ends with Dave Singh and Rob Friesen. Good evening, Rob. How's everything?
Not too bad, thank you. It was good to have a long weekend, try to catch up on stuff. Still didn't succeed completely, but anyway, it was good to have an extra day. So, and I heard you went and saw the Top Gun movie. Is that any good?
Had barbecue, pool time, and then Top Gun, which is a
Okay.
fantastic movie. So
Oh, that's good. That's good.
I can recommend it here, but
Well, it's nice to see some things come out because, I mean, COVID really did put a damper on a lot of the production. And they were even delayed, right? Coming to
yeah.
the theater. So,
But theaters are back to semi-normal. It's not packed. It was full, but it's not like crazy busy. So things are business as usual in the retail space and malls and stores, but there's some data underlying all that, right? And things like StockOdds can shed some light on that.
Right. All right.
We're approaching the last day of the month here, so I have some stuff on last day of the month I can get to afterwards. But maybe give us context first.
Let's talk about where the futures are right now here. So we've got the Dow futures. Let me just refresh this. It's changed here. Dow futures are up 38, so 0.11%. When you look at a weekly chart, we had that straight up week, right? And that was after 8 weeks down in a row on the Dow, and then we had a week up. And it just looks like it kind of went too far too fast, and maybe it's a bit of a pause and retracement. It's kind of hanging in there. It was up a little bit higher earlier, and it's pulling back. It wouldn't surprise me if we have a day that's down tomorrow, or wherever we open becomes the high of the day. That would not surprise me, just because I find that seasonality, especially the last trading day of the month and the first day of the new month, have been really robust over many years. I mean, I've been trading for about, since started in 92, some retail, and then went to professional in 98. But, seeing the cycles and how they repeat themselves, the seasonality does hold up really well. So that wouldn't surprise me to be on point with the seasonality. But then there is a kind of a counter to that, and is, if people really think that we've hit a bottom and the bottom's in, and they don't want to miss, having the rally go up a whole bunch more without them, or worse, maybe they sold at the bottom, now they're scrambling to get back in, so that could interfere. And then the thing is, June 1st is historically an up day, and specifically pretty good for small caps and things like that. So, we could just carry through and have a rally tomorrow and a rally on, Wednesday, and that's entirely possible. Or we could have our pullback day tomorrow, and then spring back and rally on Tuesday. Probably, we should check the first Friday of June as well. Let me just see. First Friday of June is really quite bullish as well.
So that means 0.9% up.
Yeah. So we could have, a rally on Wednesday, Thursday, and Friday. Maybe a pause and reflect day tomorrow. So that's the futures. Let's get back to that. S&P's up 0.26 or 11 points. NASDAQ is up the most right now, 0.60. Again, all these were up a bit more earlier, and that's 73 points in the NASDAQ futures. Russell is up 0.285 points right now. And the VIX is up slightly at 0.68%, so not even a full percent. We've got West Texas trading up 2.55% right now on the back of the sanctions. Now that does affect tanker and not as much oil pipeline. But again, not all of it is happening right away. When did you say that was going to come through, Dave?
Well, at the end of the year,
End
right?
of the year, but oil's rallying on the back of it, but it's not for a while. So we could see oil get ahead of itself and pull back again too. I don't know. The way I look at oil, I would love for it to have the opportunity to challenge, that end of February, early March high that we kind of spiked up there. And I wouldn't be surprised if it did challenge that. But I don't think anyone likes paying the price at the pump. But oil has been in a very bullish over 6 months now of pretty significant gains, right? See December. So oil came, especially West Texas crude came out of the hole in December, matching lows with August. And then it just has been marching up pretty much all the way through. A little bit of volatility, of course, but
It's almost a double from December.
yeah, it's amazing. So I don't think it's finished. The problem with trading open to close is that if you come in the morning and everything's lit up to say be involved in oil stocks, and oil's way up and the stocks are gapping up, that's inherently your problem. Is what you have to pay at that open price. Because some of the best performances I've had recently from oil stocks were because they actually opened down in the morning and then they rallied. So just keep that in mind. It's not just that you have your idea of what's strong and weak. It's what price do you have to pay to get in it, right? It could be like anything, and it could be like the real estate market. You houses are on fire, right? And then you go to buy one, and you get caught in a bidding war, and you end up paying, maybe more than you would have liked to. Well, you may have paid the highest price for the next number of years. Same thing with used cars. So just because a sector is on fire doesn't mean that you're going to be able to profit from buying it and then selling it, later at a better price. And that happens to us all of the time on the open to close format of trading, because that's really tight, and it does matter how much you pay for things. So just keep that in mind. I've been tracking a lot of things related to what has performed the best for the day in terms of stocks on my list. And almost invariably, it's the ones that had really good odds and average performance expectations from StockOdds, but they actually opened down. So you got that advantage of buying it at a discount right at the open, and then they performed as they should have. And I haven't seen as greater results with the ones that were up and you had to pay up at the open. So just keep that in mind. Okay. Why don't we circle over to you with some of the things that you see on the calendar for this week here? Seasonality, end of the month, beginning of the new month, first Friday of the month.
So tomorrow is the last day of May, and the spider is expected to do minus 0.45% according to StockOdds. So I looked at which ones might be stronger than that and weaker than that. And here are some of the ETFs that are expected to do stronger than the spider. Things like gold, GDX, GDXJ, silver, utilities, healthcare, consumer discretionary, real estate, chips. And things that are expected to be weaker are financials, KRE, KBE, XLF, oil as well, XOP, USO. So that's a little bit conflicting to with what we're seeing in the futures right now.
Well, if you look at the bond market, it is selling down, which means the yield is rising. And so it's been a sharp drop over the day today, because we had this long move down from March until about first or second week of May. And then we started to climb up a little bit, like we broke trend. And now is the first day of dropping significantly back. So that's putting pressure on rates. And usually that favors banks and REITs and not so much for utilities, right? So the question is, when we come in tomorrow, has that resolved itself, or are we still on track where the TLT, which is the 20-year ETF that represents a lot of, what we use anyway to see what it's doing in the morning, so that we can say, hey, should we press on the banks long or short or whatever we want to do. But if TLT is down significantly tomorrow, and I would suggest, long the banks rather than what the calendar, the seasonality almanac says.
I agree too.
I mean, and this is the tension. This is the macro, coming up against what has historically been, in play. And I don't know why there would be a reason specifically for banks to be weaker on the last day of May. I can't think of any reason historically. It may be just a pattern that, has no fundamental reason for it. But if we have a macro that comes in and says, hey, let's not bet against the banks, then, let's pay attention.
I also looked at some individual symbols, the mega caps, to see which ones might do better. So things like Amazon, Microsoft, Netflix, Nvidia, Google, Johnson & Johnson are expected to be stronger than the spider, and some things like Tesla, Apple, Facebook, ExxonMobil, Chevron, United Healthcare, a little bit weaker than the spider. So there's some opportunities to play some individual symbols too, according to the almanac. But again, the bigger drivers are going to be oil and the 10-year.
And then starting June 1st, we see really good performance for the month of June from the Russell. Now, June does have the Russell rebalance. So it makes sense that, there's a bigger focus with the Russell components. But it is it's the Russell 1000, 2000, and 3000 that are getting rebalanced. So, and they issue on Friday, the first Friday of June, they issue the preliminary list. And then the next Friday, again, the revised preliminary list. And the next Friday, the same thing, until finally the last Friday of the month is the rebalance. So 2.6% for June expected from IWM. So I'm thinking we should probably get the list launched for the Russell, because we're doing the top 10 for the S&P 500 now. Would probably be a good time to get something rolling for the Russell. And then in July, small caps do a little bit worse as we're more in focus on the S&P 500, earnings and things. And the S&P usually does about anywhere from 2.2 to 2.7% return in July. So I am expecting still a little bit more of a summer rally. But it may start here in June, just because we've got so discounted already. I think we have to be prepared for investors to kind of come back in, just because the problem is, remember in 2020, well, actually, remember in December of 2018, we had that sell-off, and we came back from it, and then rallied to new highs again. And then in 2020, we had COVID, and then we dropped so much, and then we rallied back to new highs. And so people have been conditioned here that, we don't want to miss a good rally back.
And it's come back huge just the last 5 days. I mean,
yeah, but I mean, like it could shake a few people out if we have a down day tomorrow. Like if it opens high and then just reverses all day, it could kind of, then some people would miss maybe the next few days of June that start to rally, and then they'll end up chasing again. But
yeah,
it's interesting. What do you see on the economic calendar? Anything?
Calendar-wise, not really anything yet.
We should point out the Taiwan thing. We have a Senator, Tammy Duckworth, has headed over to Taiwan, and the Chinese flew 30 jets over Taiwan airspace, one corner of it anyway, so caused a little bit of commotion there. But just a reminder, this Taiwan thing is not not over. And I heard that Russia's kind of slowly grinding away and making a bit more headway in the eastern half of Ukraine. So that's not going too well. What about China restrictions? I noted they're starting to put a lot of economic stuff into play here to support the economy. So I was expecting some Chinese stocks to lift off a little bit. Do you see any reason for that?
I saw some language that the factory activity is falling at a slower pace. So as these COVID curbs are easing, it's taking a little bit of the pressure off some of the companies there. So that's also bullish for Chinese stocks.
Yeah, it'll be interesting because I did see a news headline said that Chinese stocks were dipping, but yet with the stimulus and them Beijing saying they're getting a handle on the COVID spread, and so they're easing curbs a little bit. I mean, it's kind of some conflicting information here. But I was thinking that Chinese stocks would be able to bounce back a little bit here.
Mm-hmm.
So anyway, it's going to be an interesting week. It is a shortened week. And yesterday there was some markets there were some markets that were open when the U.S. was closed. So like think about Canadian stocks traded, for example, and some of them trade on both in New York and the Toronto Stock Exchange. So just keep that in mind. And the European stocks as well. So
I think
what's that?
On Wednesday and Friday we have two bullish days kind of set up for Wednesday and Friday. Wednesday is the first day of June. That's kind of bullish, and Friday's even stronger. So these next 4 days, we could have quite a bit of strength.
Mm-hmm. Yeah, we got EU's looking to raise rates. Canada's looking to raise rates. So this inflation pressure is definitely global, and it's causing rates to rise. So that might mean that if these other countries are raising, that could push the U.S. dollar down a little bit, because the U.S. dollar did have a strong rally as one of the countries that was first to sort of come out of the gate with raising rates. So just keep that in mind, that the dollar may pull back a bit. And if it does, that should foster some commodity move. If the dollar's weakening, it should make commodities a bit stronger. But then, did you see the article from Goldman that says that the metal rally should be over? There was a big article from Goldman that said they figure that the lithium and other metals and stuff have gotten ahead of itself, and it's probably going to be a sharp correction in the next couple years, and it won't be till later on in this decade that they cycle back potentially. So interesting. It's kind of like, where's the crowded trades? If you look at a chart of lumber, you saw how crazy that was, and then it reversed and pulled all the way back.
Yeah.
And it's kind of like that when these things get ahead of themselves and the crowd becomes really the trade becomes really crowded, then usually they crash back pretty severely. Anyway, I guess that's all we have for you guys today.
All right. Good luck.
So, shortened week. keep it tight. Be aware of the small caps potentially coming out of the gate June 1st and on into Friday. And yeah. Anyway, that's it.
Thanks. Good luck.
I'll let you go. Take it easy, man.
Bye-bye.